If you've been looking for specific places to invest your money and build your wealth, well, look no further, because in this video, I'm going to be going over some of the best investments where you can invest your money. Investing in the stock market isn't always easy. I mean, the stock market is one of the most accessible places for everybody to go and invest their money to build wealth. But at the same time, so many people lose their money in the stock market because they don't know how to research stocks or they get too emotional. They buy a stock, they see it go down a little bit, and then they sell it for a loss. And a few weeks later, the stock price is back to where they bought it. And then they say, I know I shouldn't have sold. If you don't want to spend all your time researching stocks, picking stocks and keeping up with them, then another thing that you can do is invest in what is called an ETF or an exchange traded fund. Now, if you don't know what an ETF is, you can watch our video on ETF for beginners. I'll leave the link in the description below. Alright, so let's get right into this video. The first and probably the most popular group of ETFs are the one that gives you exposure to the S&P 500. So the S&P 500 is just the largest 500 companies in the United States that trade on the stock market. So this is literally just an index that tracks the top 500 companies on the stock market. A couple of ETFs that will give you exposure to the S&P 500 are VOO, SPY, and IVV. So when you invest in either one of these, you are getting exposure to the 500 largest company in the United States stock market. And now you don't have to go out and search for individual companies to buy. Before I go any further, I got to make this clear. Investing your money has risk and you are never guaranteed to make money when you invest. You might even lose some money, so always do your own due diligence. Everything that I'm talking about today are just examples. I am not telling you what to go out and invest in, and I am not telling you where to invest your money. I am just giving you some examples of ETFs and how they work. There are a ton of ETFs out there and you gotta find what's best for you. You can use ETFs.com to do more research on ETFs. The second type of ETF you might want to consider is a total stock market ETF, like VTI. VTI will give you exposure to the entire stock market with big companies, medium-sized companies, and small companies. So now you're just literally investing your money in the stock market. And if the stock market goes down, your ETF would go down as well. Now the third type of ETF that you want to consider are high dividend yield ETFs. So there are two ways that you can make money in the stock market. You can make money through appreciation and dividends. Dividends are actual cash payments you get without selling your stock. There's a couple of ways you can get exposure to these dividends. You can invest in companies that are paying out high dividends, or you can invest in dividend paying ETFs. The advantage of an ETF is that you don't have to worry about trying to find the perfect company, because ETF is going to give you exposure to a whole bunch of different high dividend paying companies. And if a company goes bankrupt, you'll be okay because you're getting exposure to a wide range of companies. The downside here is you're not going to get the highest dividend possible because some companies are going to pay higher dividend than others, and your returns are going to be average out. A few ETFs that are focused on paying dividends are VYM, RDIV, and SPYD. These ETFs are in the business of trying to get you the best dividends, and this is where you have to know your goal as an investor. The fourth type of ETF you may want to consider investing in are emerging market ETFs. The whole idea behind this is now that you're diversifying your money globally. The reality is, every economy has its own struggles, and no economy can continue booming at a consistent rate forever. There are also countries around the world that are growing at a fast pace right now, and this makes sense because small companies grow at a faster rate than bigger companies. When you're investing in emerging markets, you're taking out a little bit more risk because you're investing in countries like China, India, and Brazil. Some examples of these ETFs are VWO, EEM, SCH, and EDIV. These are 4 different ETFs that gives you exposure to the emerging markets. The other type of ETF you may want to consider investing in are innovation ETFs. We are in the innovation age right now, where technology is growing and innovating way faster than we have ever seen before. If you want to invest your money in the future of innovation, then you can look at innovation ETFs. Some of the most popular innovation ETFs are managed through the ARK Fund, which is managed by Cathie Wood. Cathie Wood is now a famous investor because of the returns she gave her investors. These funds also come with their own fair share of risk because you're investing in a lot of small companies and a lot of startup companies. These funds are actively managed, which means you have people actively working to try and find the best companies to invest in. And so your expense ratio is going to be a little bit higher. Some examples of these are ARKW, ARKK, ARKG, and ARKQ. In 6th place, we have REIT ETFs. REIT stands for Real Estate Investment Trust. So if you want to get some exposure to real estate, investing in REITs is definitely a good way to get some exposure. When you invest your money in REITs, you're investing in a company that is investing in real estate, so you're not getting direct exposure to real estate per se, but you're investing in a company that invests in real estate. So the whole idea here is, if real estate is really booming, this company is going to be booming because they are investing in real estate and you are investing in that company. A few examples of REIT ETFs are VNQ, USRT, and SCHH. REITs are required by law to pay out 90% of their profits to shareholders. This makes REITs attractive for dividend investors. In 7th place, the next type of ETF you want to consider investing in are growth stock ETFs. These are companies that are trying to grow as big as possible and as fast as possible. And within these ETFs, you have small growth stocks and large growth stocks. The first example of this would be investing in an ETF like QQQ. So QQQ gives you exposure to the Nasdaq, which is essentially the 100 largest non-financial companies like Amazon, Apple, Microsoft, and Tesla. On the other hand, you can invest in small cap growth stocks through ETFs like SLYG. Now, the key for any of these investing strategies to work, you have to stay consistent and you want to keep investing your money bi-weekly or every month. You want to keep investing your money in these ETFs so that you can continue to build your portfolio. The best way to build wealth in the stock market is leave your money in stock for the long term.